Welcome back, and in our top business story, Majid Al Futtaim Holding LLC recorded 11.3 billion dirhams in revenues during the first half of the year, according to a company statement. The company's revenues were up 10% compared to the first half of last year, and its earnings before interest, taxes, depreciation and amortization from recurring operations increased by 11% to 1.6 billion dirhams. Majid Al Futtaim's strong performance in the first half of the year is credited to the diversification of business operations across its three business segments, which include MAF Retail, MAF Properties and MAF Ventures. According to CEO Iyad Malas, diversification across business segments and geographies led to solid, broad-based operating performance. He added that the company saw a strong performance in its home market, the UAE, with tenant sales growing 10% year-on-year, with Carrefour sales increasing 7% and the average occupancy at its hotels over 88%. The results were also supported by an 11% revenue growth in other markets, including 7% in Egypt and 9% in Bahrain. Shares in Indian carrier Jet rose as much as 19% on Friday on hopes a government panel may approve a deal allowing Abu Dhabi-based Etihad to acquire a stake in the airline. The deal, through which Etihad Airlines would hold a 24% Jet stake, was announced in April, but it is yet to be cleared by India amid concerns about ownership control. India's Foreign Investment Promotion Board, a government body, said it would meet next Monday when the Jet-Etihad agreement was expected to be discussed. The agreement, however, would still need the approval of India's stock market regulator and the National Home Ministry to take effect. Jet shares jumped as much as 19.35% to a day's high of 402 rupees, but then retraced some of their gains to trade up 13% at 380.9 rupees. Logistics companies in the UAE have signed up to lease a glut of warehousing space around Dubai World Central in Jebel Ali as the new airport increases operations. According to reports in a local daily, figures from property agents show up to 1 million square feet of warehousing space has been leased during the first 6 months of the year in the adjacent 140 square kilometre DWC and 56 square kilometre Jafza free zones as the new airport begins to increase its functions. Firms taking space at the new facilities during the period include the freight company UPS, which expanded its operations by 160,000 square feet in Jafza. The German-based logistics firm Hellmann, that signed for an additional 130,000 square feet, and logistics giant DHL, which is understood to have signed for another 500,000 square feet at DWC, according to the report. Figures from Knight Frank show that the average annual rent for prime logistics facilities in Jafza increased to 33 dirhams per square foot in June, a slight increase on the previous quarter and a 10% increase on the same period the previous year, when it stood at 30 dirhams per square foot. The airport, which is expected to become the world's largest when fully operational, opened a cargo centre in 2010 and on October the 27th this year will open its doors to its first passengers as it becomes a hub for the budget airline carriers Wizz Air of Hungary and Saudi Arabia's Nas Air. According to a new report from Azteco, Abu Dhabi is primed to offer mid-level investors an increasingly wider choice of properties during the second half of the year, with a rush of handovers. The existing residential supply will be augmented by the handover of 3,500 units at the Gate District, Shams Abu Dhabi, and standalone tower projects, including Beach Towers, Oceanscape and Mangrove Place, as well as the first wave of affordably priced homes located within Hydra Village. Azteco's H1 2013 Abu Dhabi real estate market report also noted improved transactional activity over the last few months and growing confidence buoyed by improved market sentiment, driven by price increases in neighbouring Dubai. John Stevens, the managing director at Esteco Property Management, was quoted as saying that with more units coming on stream over the next 6 months and well-established communities offering improved facilities, good quality finishes and attractive leasing prospects, both investors and owner-occupiers are once more eyeing Abu Dhabi for long-term investment potential.